Disposition of assets. I know you're like, I wanted more of those questions. I totally get you. We got lots of great examples throughout the rest of the course. Talking about disposition of assets in general, it's essential to understand the difference between the realized and recognized gains, as well as the concept of taxable gain or boot, and the impact of the cancellation of debt. Now, you might be thinking a lot of this is going to go over what we just talked about, and yes, it does, and yes, that's on purpose. These are critically important concepts. I mean, this is foundational for everything we'll see later on with partnerships, S corps. So yeah, am I going to beat this to death and make sure you're an absolute expert at this? Yes, I am, because you are not going to slack off here when this is so crucial, especially for lessons we'll see in the future. Other exams, there's certain topics where it's just one-offs, but here, this builds and builds and builds. A realized gain represents the actual increase in value of an asset when it's sold or disposed of in the real world. It's calculated by subtracting the asset's adjusted basis, which is the original cost, plus improvements, minus any depreciation. That's obviously important as well, even in the cost recovery lesson, everywhere else like that, from the selling price. Over the recognized gain, this is the portion of the realized gain that is actually subject to taxation and must be reported on a tax return. In some cases, the entire realized gain may be recognized if there's no tax rules affecting that, while in others, only a portion of it may be subject to taxation due to our tax deferral strategies like like-kind exchanges. This is the IRS saying, okay, yeah, you can get this tax benefit by deferring taxes if you follow these specific types of transactions, such as like-kind exchanges. All right, going through some of these other concepts as well. Again, nothing that we haven't seen. This taxable gain, the boot, term boot refers to the non-like-kind property or cash. So also, what could boot be if I'm giving a property, such as if I'm doing land for land, and I also give a truck, like instead of cash, if it said a truck, well, that's like the odd man out. So that would be the boot as well. Cash received in the exchange, such as a like-kind exchange of the IRC. The boot received is taxable as it does not qualify for tax deferral. In other words, the boot represents the portion of the recognized gain that is subject to tax. For example, if you exchanged an investment property for another one and also received cash, as we saw, the cash received is considered boot and will be subject to taxation, but we have those formulas down and we will get those questions right. Cash kept and not reinvested. All right, so here's an interesting point. If you sell an asset and keep the cash proceeds without reinvesting them in a similar asset, the entire gain will typically be recognized and taxable. So in those like-kind exchange transactions, let's say halfway through, before the transaction's finalized, you say, hey, I'm just going to sell you this asset. I don't actually want yours. I'm just going to, pay me cash for it. So that would not be a like-kind exchange because you didn't get anything in return. So this is different from a like-kind exchange where the gain can be deferred if the cash is reinvested in a similar asset as allowed by tax laws. Next up, cancellation of debt, excess debt assumed. In some cases, the cancellation or forgiveness of a debt may result in taxable income referred to as COD or cancellation of debt income. This can happen if debt is forgiven or if the asset is sold for less than the amount of the debt assumed by the buyer. The excess debt assumed is treated as income to the seller as the seller has been relieved of the obligation to repay the debt. This is similar to a concept we see in individual taxation. How if you owe a credit card company $5,000 and they say, all right, we realize you can't pay it, you're facing possible bankruptcy. That is treated as if they gave you $5,000 to then pay it down, so you have to pay tax on the $5,000. In summary, when disposing of assets, it's going to be essential to understand the difference between realized, recognized, also basis, taxable gain or boot, and the impact of the cancellation of debt. All of these are going to be critically important, but you got this. You can do it. I've got faith in you. Keep powering through. We got a lot of great examples. Have faith. Trust the process. And if you think you're doing enough work, just do a little bit more work. You'll be done with this soon enough. We got more examples here, realized and recognized gains. And if you feel free to skip the examples, these are here for your benefit. But if you want to keep going through and to clips that are not dealing with examples, that's on you. We've got them here to make sure you're prepared. Suppose you purchased an investment property for $200,000 and you made $50,000 worth of improvements. You also claimed $30,000 in depreciation deductions during the time you owned the property. You later sell the property for $260,000. So first off, what's the adjusted basis of this property on your balance sheet? That would be the original cost plus the improvements. Now that does not include things like just normal repairs and maintenance or anything. But let's say you add an extra wing onto the house, you add extra office space to the building, that would be considered an improvement. We deal with that in cost recovery, capitalizing versus expensing. And then depreciation, obviously that takes a factor out of your basis. So our adjusted basis is 220. The realized gain here is the 260 selling price minus the 220 adjusted basis for 40. Now we're kind of out of the like-kind exchanges. Assuming there are no tax deferral strategies in place, such as like-kind exchanges, the recognized gain is also $40,000, which must be reported on your tax return and then will unfortunately be subject to taxation. Next up, taxable gain boot. You decide to exchange the investment property mentioned in this example for another investment property worth $230 and also receive $30,000 cash in the transaction. The $30,000 cash received is considered boot and is subject to taxation. The recognized gain in the scenario, as we've seen time and time again, it's the lesser of the realized gain of 40 or the boot received of 30. In this case, the recognized gain subject to tax will be $30,000. Looking good. Next up, cash kept and not reinvested. Ooh, that does not sound good for tax purposes, because if you sell the investment property for $260 and keep the entire cash proceeds without reinvesting them in a similar asset, the entire realized gain of $40,000 will be now a recognized gain and then as such subject to tax. And then lastly, here we got the cancellation of debt with excess debt assumed. You own a property with a mortgage balance of $250,000. You sell that property for $230 to a buyer who assumes the mortgage. The difference between the mortgage balance and the sale price is $20,000. So this $20,000 is going to be considered cancellation of debt income and is taxable to you, as you've been relieved of the obligation to repay that portion of the debt. A lot of great examples. You're going to become quite the tax whiz by the end of this.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.